the operational side and managing that well is massively productive to your bottom line, because unlike sales, every dollar that you make in sales, that doesn't mean that you make a dollar in net profit, which is the money you keep. However, every dollar that you save in cost is a dollar that you keep. And this is really, really important to remember.
Warning: Damian Andrews' growing revenue and profit, if implemented, will put more money in your pocket. Please use with caution.
Damian Andrews, growing revenue and profit. And we're getting honest today. We're talking about the Honest Company, which in the second quarter 2023 reported an overall increase in sales of 8% in that period, which is a big gain from the previous quarter. And what they put that down to is what they call the transformational initiative. Now, what that is, they made a strategic aim to focus on three things. So the key drivers of value that they saw it in the transformation initiative is brand maximization, which this means from their website, they're aligning their pricing to reflect the premium nature of the brand, leveraging the Honest brand to drive growth through innovation and improve marketing effectiveness. Now, this is a key point because you need to position where you're aiming at. Knowing your customer is very important. It's different between marketing yourself as, say, an Apple phone, which is, again, a high-end brand with a lot of margin in there, high price, compared to a cheaper off-the-shelf item. So they're very, very specifically focusing on that, and I'll get into the details of what they mean by that. The other one is margin enhancement. So expand the gross margins by exiting Europe and Asia, discontinue low margin product lines and SKUs, and then they're driving their cost activities. And that from that side of things. So this is what, again, looking at where is your product line at? Are you focusing on, which element of the costs are you focusing on? Are we focusing on products that have, a lot of products that are low margin because that's what you need, or are you focusing on the high end? And from here, they're focusing on the high end. And then we've got the operational discipline is the third element of this transformational initiative, building a culture of executional excellence, taking a focused approach to trade and promotion activities, and managing working capital through inventory reduction. So that was what they set up. So let's come back to their report and see how they're going with that. Well, they're exiting Asia and Europe, and they talk about that here in the report, because they're lower end, lower margin products that they're putting over there. So coming back to that brand maximization, they say they see themselves as a high premium brand, which again, higher margins. So they're exiting markets that don't fit within that. Now, that can be a challenging thing to do, is to exit those markets. And one of the things that CEO Carla Vernon said is that we remain committed to expanding our margins. That was one of the key things that she stated that they would be doing. And of course, if you want to expand your margins, you've obviously got to take out things that have got lower margins. It's overall way of the law of averages. Take out the lower margin products, just don't do them anymore. Your margins overall going to increase. And there's a number of other factors that go into that, and we talk about that in our Baby Dragons program, how to actually make those changes and shifts. So that could be something that's useful if you want to do this, because they've got quite a successful transformational initiative, as they call it. And the other thing that they focus on, operational discipline, really, really important as well. The operational side and managing that well is massively productive to your bottom line, because unlike sales, every dollar that you make in sales, that doesn't mean that you make a dollar in net profit, which is the money you keep. However, every dollar that you save in cost is a dollar that you keep. And this is really, really important to remember. And also how they've done that is they continue to improve the discipline in their inventory management. So while they increased their sales by 8% in the second quarter, they reduced their inventory holdings by 17%. in that same period. And that's a big reduction in cost because you haven't got that inventory just sitting there. And that can be achieved through a number of factors, such as being more efficient in the way that you move your product. So from the production right through to when it actually gets sold, you don't have to hold as much because it's not sitting there for as long. And that's, again, we go through how to do those things in the Baby Dragons program. Now, there's a lot of good information out of this report and how to move forward with your business and ensure that it grows its revenue and profit. And that is one, knowing what your brand is. Where are you aiming? Where are you targeting? Being very specific about that. Again, the Honest, I love the name, Honest Corporation. To get that domain name, honest.com, that's pretty cool. Digress. But what we're talking about, brand maximization, again, that's their focus. This is our brand. This is what we're going to do. And when you get focused on your brand, it eliminates things that get in the way. And part of that was, okay, we're premium nature. Premium nature has a higher margin generally because you're selling less of them, but at a higher quality product, less of them with a bigger margin. And part of that was going, okay, we need to look at how we're operating here. We've got lower margins in Europe and Asia, so we're going to discontinue those low margin product lines and remove them out of the picture, which is what they did, and also drive cost saving activities. There wasn't a lot in this report about what they're doing in that regard, save for, as I mentioned before, the operational discipline was, again, to focus on improving and reducing the holding of inventory, because that's a cost. If you can get it from production to sold quicker, you're going to save money. So there's the Honest company's transformational initiative. The big drivers in their sales were increases in the sales of diapers and wipes, but that was only part of their sales increase to get to their 8%. And it all comes back to having that plan in place, the objectives that you want to achieve, and the strategic objectives, not the tactical objectives, but the strategic objectives of where you want to go with that. And that's something that we do take you through in the Baby Dragons program. So if that's of use, feel free to reach out. We'd be more than happy to help. And you can achieve those kind of things as well and not fall behind the competition like the Honest company that is continuing to move forward and grow its revenue and profit. This is Damien Andrews for Growing Revenue and Profit.